Good morning everyone, and welcome to another intraday video from Elliott Wave Analysis. Guys, this time around we're going to take a look after what we seen last night. We want to get back to seminal levels, and we're going to take a look at what we should be expecting for the next, I would say, 7 days. We were right last night, even though we were expecting a B wave. We were right in one thing, that these two legs on the oil trade, they were equal to the peaks, and this is calling for the correction higher in risk. We say we started seminar yesterday with that being the first topic out of the seminar, and we knew that oil is going to trade higher for the next 3 or 4 weeks. 1 or 2 weeks, and the risk trade is going to be supported. Technically, oil should trade to around 94, 96, 99, 65. That move in oil is the clearest one in the whole market, and that this move in oil is going to take euro to 140. It's going to take S&P to 1250, 1258. It's going to take the dollar lower. That's what we were saying yesterday. So let's take a look at the same oil trade in the small time frame. That is what matters right now, right? Okay, this is oil in a 1 hour chart. In the 1 hour chart, we have a nice subdivision: 1 2 1 2 3 4 3 4 and a 5. Now that looks very nice. You got 1 2 3 4 5 6 7 8 9 swings to the outside, but the RSI this morning with the last 2 hours has showed in oil is have erased divergency, which is telling me that maybe the way the counting is not like is presented here, is like 1 2 1 2 and then another 1 2 3 4. There is no overlap right there, and going higher to end wave 3 with the next high that should end someplace around current levels that we are at the 2618. That's telling me that we're gonna get something like this in oil, but still it's in Porsche as we speak. It's very powerful, and it's telling me that the risk trade got more outside to come. Like when we look at the daily charge on the oil, this is the first leg within the risk trade. So what we're expecting, either from here or from here, I want to 686.98. Either from here we should expect 3 ways back, and then another 5-way higher. That's the minimum. Like I say, to around 95 area is when we should get the putback and the risk aversion continuation trade right there. That's for oil. Now let's keep going now and check the US dollar index. Okay, in the US dollar index, we mentioned also yesterday at the seminar that all we got from the lows were 1 2 3 ways. We were very clear mentioning that, but right now the declines last night is being very powerful to the downside, and yesterday we were expecting a biggest wave B right here. It didn't happen. This looks like a wave 3 or some degrees. So maybe I want to see that the index now testing 7240 area, 7740 area. Otherwise what's going to happen is that we are in the beginning of a big move, and that's what we were referring all over last week, that the biggest corrections in summer is about to happen. Now, which scenario we can expect in the dollar index? It looks like we got something like 1 2 1 2, possible 3, or we got A B C W S Y, something like that. Or even you can count this move, you can count it as a WSY short in a small time frame. We're gonna cover that now. But anyway, the dollar index should find support around 77.40, or the count that we have been mentioned, which is the next. That's gonna be the count when either at 77.40 or 76. This one right here is 76.63. We should find support within the first leg, get band tree. But seeing oil every second right now, seeing the oil trade, it looks to me more and more like the dollar did a 1 2 1 2, or the dollar did a three-way move, and the dollar is gonna go to new lows. I don't believe that, because I see 5 ways on the S&P. So I believe that the count that is in place on the dollar, 95% sure, is the next, and this is gonna be a big correction to the downside that can take the dollar to 77, 75, 87, which is around 140, 139 in the euro dollar. So keep that in mind, guys. That is there, and that should happen. Now we're gonna take a look at the S&P. Okay, the S&P, like oil, looks like it's correcting higher. Like we've been mentioning, there was a chance, and last week we've been saying last week that there was a huge chance that the S&P who had ended a 5-way move at the lows that it did around, it was around 10.74. Now, what you expecting in S&P, a 3-way move correction in risk. Like the S&P should trade now to either 1223, 1258, or 1300 at the end. It's been very powerful move. It's been very powerful move from the lows. We have done almost 200, like 100 and something points in less than a week, and we should be ready to see something like this pretty soon. And then after is when the big move to the downside. This scenario is supporting also the next. This is supporting the idea that the US dollar is nesting, and this correction here is going to allow the US dollar to make a wave 2 within the nest, and this should be the move that take the dollar lower. Now, it's more time frame. Okay, in a small time frame within the S&P, a huge move today. That's a wave 3, wave 5, and what we see from the lows is 1 2 3 4 and 1 2. We should get a 3 4 5, target 1200, 1210 before the 3 waves back and another swing higher. So ideally, guys, what we would like to say about this video, the message is this: the trend now is not the dollar. The dollar is said to be corrective in 3 wave move, and the dollar should be weak for the next, I would say, 2 weeks. So what we're expecting is, and how you need to trade it, is doing the swings. We got stopped up yesterday on the short euro, but that's all right. That's part of the trade. That's the first trade that we lost technically in about 2 months, but that's all right. That's gonna be recovered pretty soon. All we need to wait now is for the S&P to end 1 2 3 4 and then 5 ways to around 1200, then waiting for the 3 ways back, buying the risk or selling the dollar after this first leg down in the S&P. That's about it. There is nothing more that you can do now at this stage. Don't pick. If you pick, I see many US dollar pairs ending cycles around current levels. Of course, it's going to be a big pullback, but at the end of the day, better to wait a little bit, and then you're going to be getting better trade position. But it's very clear where we stand. Where we stand right now is that we believe that the dollar is nesting for the big move that should happen at the end of October or November. Thank you. Hope you guys understand where we stand. Remember, the trend, the short and mid-term trend is no anymore about the dollar. The dailies and the weekly is favoring the dollar, but short time frames, they are in favor of risk. Thank you. I hope you guys understand.